Hey there, future Wall Street wizards. Welcome to the trading game, where we turn the complex world of trading into a fun and engaging adventure. Whether you're a complete newbie or someone with a bit of experience, this series is designed to help you navigate the financial markets with ease and confidence. Ever thought about diving into the exciting world of trading? It's a realm filled with opportunities and challenges where fortunes can be made and lost. But don't let that scare you. With the right knowledge and tools, you can make informed decisions and potentially reap significant rewards. It might seem scary, but trust me, it's not as hard as it looks. Many people think trading is only for the experts or those with a lot of money, but that's not true. Anyone can learn to trade, and with practice, you can become proficient. The key is to start small, stay informed, and keep learning. We're going to break it down step by step so you can start your trading adventure with confidence. We'll cover everything from the basics of what stocks and bonds are to more advanced strategies like options trading and technical analysis. By the end of this series, you'll have a solid foundation to build upon. Think of trading like a giant game. Just like in any game, there are rules to follow, strategies to develop, and risks to manage. The more you understand the game, the better your chances of winning. And remember, every great trader started where you are now, with a desire to learn and a willingness to take the first step. You buy and sell stuff, hoping to make a profit. In the trading world, this means buying stocks, bonds, or other financial instruments at a lower price and selling them at a higher price. It's all about timing and understanding market trends. We'll teach you how to read these trends and make smart decisions. Stocks, bonds, options, it's all up for grabs. Each type of investment has its own set of characteristics and risks. Stocks represent ownership in a company. Bonds are like loans you give to companies or governments, and options give you the right to buy or sell an asset at a specific price. We'll dive into each of these in detail. Don't worry, we'll explain all the fancy terms, from bull markets to bear markets, dividends to yield curves. We'll break down the jargon so you can understand what it all means. Our goal is to make you feel comfortable and confident as you navigate the trading landscape. The key is to start simple and learn as you go. Don't try to master everything at once. Begin with the basics, make small trades, and gradually build your knowledge and experience. Trading is a journey, and every step you take brings you closer to your goals. Ready to learn the ropes? Let's do this. Together, we'll explore the fascinating world of trading, uncover its secrets, and equip you with the skills you need to succeed. So buckle up, stay curious, and let's embark on this exciting journey together. Level up your life. Why trade, you ask? Well, for starters, it's a chance to grow your money. Imagine turning a small investment into a big pile of cash. Sounds pretty sweet, right? But trading is more than just making money. It's about taking control of your finances. It's about learning new skills and challenging yourself. And hey, maybe you'll even impress your friends with your market knowledge. So, are you ready to level up your life? Let's dive into the tools you'll need to get started. Before you start trading, you need the right tools. Don't worry, it's not as complicated as it sounds. First, you'll need a brokerage account. Think of it like a bank account for your investments. You can open one online in minutes. Next, you'll need a trading platform. This is where you'll buy and sell your stocks, bonds, or whatever you're trading. Most brokerages offer their own platforms. That's it. With a brokerage account and a trading platform, you're ready to start your trading adventure. All right, rookie traders, let's talk strategy. Don't overthink it. Start simple. A great strategy for beginners is to invest in what you know. Do you love a certain brand of sneakers? Check out their stock. Another easy strategy is called dollar cost averaging. You invest a little bit of money every month, no matter what the market is doing. This helps you ride out the ups and downs. Remember, slow and steady wins the race. Don't go all in on a risky bet. Start small and learn as you go. Section 5, watch out, common trading tripwires. Trading can be tricky, especially for beginners. The stock market is a complex and often unpredictable environment, and without the right knowledge and preparation, it's easy to make mistakes. Many new traders dive in headfirst, only to find themselves overwhelmed by the sheer volume of information and the fast-paced nature of trading. It's important to take a step back and understand the common pitfalls that can trip you up along the way. There are a few common mistakes to avoid. these mistakes can be costly, both in terms of money and time. By being aware of these potential tripwires, you can navigate the trading landscape more effectively and increase your chances of success. Let's take a closer look at some of the most frequent errors traders make and how you can steer clear of them. First, don't let your emotions get the best of you. Trading can be an emotional roller coaster, with the highs of winning trades and the lows of losing ones. It's easy to get caught up in the excitement or panic, but making decisions based on emotions rather than logic can lead to poor outcomes. Emotional trading often results in impulsive actions, such as buying high out of greed or selling low out of fear. It's easy to get caught up in the excitement of a bull market or the fear of a bear market. Bull markets, characterized by rising prices, can make traders overly optimistic, leading them to take on more risk than they should. Conversely, bear markets with falling prices can induce panic and cause traders to sell off their holdings prematurely. Both scenarios can be detrimental to your trading strategy if not managed properly. But remember, keep a cool head and stick to your strategy. Having a well-thought-out trading plan is crucial. This plan should outline your goals, risk tolerance, and the criteria for entering and exiting trades. By adhering to your strategy, you can make more rational decisions and avoid the pitfalls of emotional trading. It's also helpful to take breaks and step away from the screen to clear your mind and maintain perspective. Second, don't chase after the latest hot stock tip. It's tempting to follow the crowd and jump on the bandwagon of a trending stock, especially when you hear success stories of others making quick profits. However, this approach can be risky. Hot tips are often based on speculation and hype rather than solid fundamentals. By the time you hear about them, it might be too late to benefit, and you could end up buying at a peak. Do your own research and invest in companies you believe in. Conduct thorough analysis and due diligence before making any investment decisions. Look at a company's financial health, management team, competitive position, and growth prospects. By understanding the underlying value of the stocks you invest in, you can make more informed choices and build a portfolio that aligns with your long-term goals. Don't believe everything you read online. The internet is full of misinformation and biased opinions. It's important to verify the credibility of your sources and cross-check information from multiple reputable outlets. Be wary of sensational headlines and promises of guaranteed returns. Critical thinking and skepticism are your allies in navigating the sea of information available to traders. Remember, trading is a marathon, not a sprint. Success in trading doesn't happen overnight. It requires patience, persistence, and a long-term perspective. Focus on a gradual progress and continuous learning rather than quick wins. The market will have its ups and downs, but staying committed to your strategy and adapting to changing conditions will help you achieve sustainable success. Be patient, stay disciplined, and you'll be well on your way to success. Discipline is key to sticking to your trading plan and avoiding impulsive decisions. Patience allows you to wait for the right opportunities and not rush into trades. By cultivating these qualities, you can navigate the challenges of trading and work towards achieving your financial goals. Section 6. Knowledge is power research rules. Before you buy any stock, do your homework. Read everything you can about the company. What do they sell? How are their sales? Who are their competitors? Luckily, there are tons of resources out there for investors. Websites like Yahoo Finance and Google Finance offer tons of free information. You can also read company filings, industry reports, and financial news. The more you know, the better decisions you'll make. So, put on your research hat and start digging. Section 7. Trading like a pro. Responsibility matters. In this section, we will delve into the crucial aspect of trading responsibly. Whether you're a seasoned trader or just starting out, understanding the importance of responsibility in trading can make a significant difference in your financial journey. Trading can be exciting, but it's important to stay responsible. The thrill of watching the markets and making trades can be exhilarating, but it's essential to keep a level head. Excitement should never cloud your judgment or lead you to make impulsive decisions. Responsible trading means making informed choices and sticking to your strategy, even when the market is volatile. Never invest more than you can afford to lose. This is a fundamental rule in trading. It's easy to get caught up in the potential for high returns, but it's crucial to remember that the market can be unpredictable. Always set aside a portion of your funds for trading that you can afford to lose without affecting your financial stability. This way, you can trade with a clear mind and avoid unnecessary stress. The market can be unpredictable, and you don't want to put yourself in a financial bind. Market fluctuations are a natural part of trading, and prices can change rapidly. By being prepared for these changes and not overextending yourself, you can navigate the ups and downs of the market more effectively. Always have a plan in place for different market scenarios. It's also important to diversify your portfolio. Diversification is a key strategy in managing risk. By spreading your investments across different asset classes, you can reduce the impact of a poor-performing investment on your overall portfolio. This approach helps in balancing the risk and reward, ensuring that your financial health remains stable. Don't put all your eggs in one basket. This age-old adage holds true in trading as well. Concentrating all your investments in a single asset or market can be risky. By diversifying, you spread the risk and increase the chances of achieving more consistent returns over time. Think of it as a safety net that protects you from significant losses. Invest in a mix of different assets like stocks, bonds, and other investment vehicles. Each type of asset has its own risk and return profile, and by combining them, you can create a more resilient portfolio. Stocks might offer higher returns but come with higher risk, while bonds provide more stability. Balancing these can help you achieve your financial goals more effectively, and maybe even some real estate. Real estate can be a valuable addition to your investment portfolio. It often provides steady income through rentals and can appreciate in value over time. Including real estate in your portfolio can offer diversification benefits and act as a hedge against inflation. Remember, slow and steady wins the race. In the world of trading, patience and consistency are key. It's not about making quick profits, but about building wealth over time. By staying disciplined and following your trading plan, you can achieve long-term success. Avoid the temptation to chase after quick gains, as this can lead to unnecessary risks. Be patient, stay disciplined, and always trade responsibly. Trading is a journey that requires continuous learning and adaptation. By maintaining a responsible approach, you can navigate the complexities of the market with confidence and achieve your financial objectives. Remember, responsible trading is the foundation of long-term success. Section 8. Never stop learning. The trading journey continues. Congratulations, you've made it to the end of our beginner's guide to trading. But remember, this is just the beginning of your trading journey. The market is constantly changing, so it's important to never stop learning. Read books, take online courses, and follow experienced traders. The more you learn, the better trader you'll become. So keep learning, keep growing, and never give up on your dreams of becoming a trading master. Section 9. Now go get 'em, trader. You've got the tools, you've got the knowledge. Now go out there and make some money. Remember, trading takes time and practice. Don't get discouraged if you don't become a millionaire overnight. Start small, stay disciplined, and always be learning, and most importantly, have fun. Trading can be an exciting and rewarding journey. Now go get 'em, Tiger. The market's waiting for you.